Welcome to the investor conference call, CTM Results and Key Developments for 6 months of 2013. My name is Lorraine and I will be your operator during today's conference call. At this moment, all participants are in a listen-only mode and your lines will be muted. At the end of today's presentation, we will have a question and answer session. Please note that this conference is being recorded. Now, I'll turn the call over to Ms. Georgina Guerrero, Head of Planning and Finance. Ms. Guerrero, you may begin.
Thank you, Lorena. We would like to welcome everybody to this first half of 2013 earnings conference call of Consorcio TRANSMANTARO. We have today with us conducting the call Mr. Cristian Restrepo, CFO, Mr. Luis Lasso, CDO, and Mr. Jose Echevarria, Project Area Manager. At the end of the conference call, we will be ready to answer your questions and listen to your comments. Well, it is now my pleasure to turn the call over to Cristian Restrepo, our CFO. Please go ahead, Cristian.
Thank you, Georgina, and good morning to everyone. Thanks once again for joining us to review CTM's first semester 2013 performance. Today, I'll begin with a brief CTM overview. Then we will go through significant developments on first semester 2013. After that, we will talk about the operation performance. Then we will go through our financial performance and some important key metrics. And finally, we will have a Q&A session. Okay. CTM builds, maintains, and operates power transmission networks in high voltage. It is one of the main transmission companies in Peru with 23% of transmission market, percentage that we aim to maintain or even increase in the next years. CTM owns 8 concessions with the Peruvian government that represent 88% of our revenues, and 9 contracts with private companies, mainly generation and mining companies. Given that the income from the concessions with the government is regulated and guaranteed, CTM has not volume risk. That means we get paid for having the transmission lines available and not for the amount of electricity that passes through our lines. Also, CTM has practically non-counterparty risk. On the map, you can see CTM's concessions on orange color, being Manzano Socabaya the main one, because of its great strategic importance for Peru. This line interconnects the central with the south part of the country, where mining projects are located today. On next slide, we explain the main significant event for the company on first semester this year. On July, CTM won an important and strategic concession line, the Manzano-Montalvo line. This project also interconnects central with south parts of the country and reinforces the south interconnection system. It has 900 kilometers at 500 kilovolts with an expected investment of 400 million, more or less, dollars, and annual income of approximately 41.5 million. CTM signed the concession contract on September for the construction of this line. The construction period for this project will be 38 months, and the concession period is for 30 years. Also, on the first semester, CTM successfully issued $450 million in an inaugural international bond under Regulation 144, with a Regulation 144 Reg S with a coupon rate of 4.375%. These bonds have an investment grade and a stable outlook by Moody's and Fitch. The use of proceeds of this, the money raised with these bonds was prepaid all debt that CTM had with banks and with a parent company, REP. We will see more details of this transaction later on the presentation. This transaction lowered significantly the company financial costs and allow us to continue growing. On next slide, we show some CTM key figures. In July, CTM had 2,355 kilometers in line circuits. As you see, the company has been growing consistently, almost duplicating its size in the past 4 years. Even though this high rate of growing, we have aimed to keep our technical performance indices like availability of the lines and number of failures, maintaining levels of operational excellence. On the other hand, CTM has been growing also its market share in the last years. Today, CTM has 23% of Peruvian transmission market, and we expect this percentage to continue growing. ISA Group, so its companies in Peru, its leader in the transmission market, it has more than 60% of Peruvian transmission market share. On next slide, speaking about financial performance, CTM adjusted income, and here we say adjusted because we include the income from contracts CTM have with private companies, mainly generation and mining companies. This income in the financial statements, because of accounting policies, is considered as financial income. But for the exercise, we include it in the operational income. Well, CTM adjusted income has been growing consistently in the last years. From 2009 to 2012, the company almost duplicated its income. At December 2013, we'll have approximately 3 times the income we had in 2009. At July, our income was $43.5 million, and we expect to close 2013 with approximately $90 million in income. It is important to highlight that all our income is fixed in dollars, in US dollars, and adjusted by an USA inflation index. That's the finished goods less food and energy index. Also, all our debt and our accountancy is in dollars, so we don't have FX risk. The significant income growth in 2013 is explained mainly because of the startup and commercial operations of 3 projects. First one, Zapallar Trujillo, which began operations in December 2012. It's a 500 kilovolt line project. The capex investment was approximately $200 million, and it has an annual regulated income of almost $26 million. The second one, Salara Piura, began operations in May 2013. The capex investment of this project was approximately $20 million, and it has an annual regulated income of more than $2 million. And finally, Phoenix, which began operations in March this year. Phoenix is a private contract with capex investment of almost $16 million and annual income of almost $3 million. As I said before, Zapallar Trujillo and Salara Piura are contracts between CTM and the Peruvian government with regulated income and a concession period of 30 years. Phoenix is a 20-year private contract. On the pie graph below, we can see that almost 90% of CTM income is regulated, and the tendency for the future years is to increase this percentage. On the pie at the bottom right, you see that our main clients are generation companies mainly. On next slide, in this slide, we show the company revenue build-up and the contribution in revenues of each of the projects that the company is developing today. That means projects with contracts already signed. As I mentioned before, at the end of 2012, CTM's revenues was almost $60 million. In 2013, our revenue will be approximately $89 million. Growth explained by the beginning of operation of Zapallar Trujillo on December 2012, Salara Piura, Phoenix, and Pomacocha Carbomayo that began operations on September 20, 2013. In 2014, we will have approximately $109 million in revenue. This incremental revenue for this year came from full-year operations of lines that began to operate in 2013, that's Tomacocha Carguamayo and Talara Piura, and from the beginning of operations of Trujillo Chiclayo. In 2015, the company will have approximately $133 million in revenue, explained by the incremental revenue from full-year operations of Trujillo Chiclayo and from the beginning of operation of Machu Picchu Cotarinche project. In 2016, the revenues will be approximately $140 million, increase explained by the beginning of operations of Mantaro Marcona that will have full-year income in 2017. Here, with income of approximately $176 million. It is important to highlight here that this revenue built up came from contracts already signed with regulated and guaranteed income. On next slide, talking about company net income, it decreases on the first semester 2013, mainly explained due to the financial costs related to the prepayment of the banks. That's the loans that we have with commercial banks that we prepay with the issuance of the international bond. On the other hand, the company has had historically stable margins, and we expect to continue to have them through the next years. Our margin EBITDA has been around 80% and will continue on this level for the next years. The EBITDA have been growing also consistently in the past years and will continue to grow. For first semester 2013, EBITDA was almost 36 million, and at the end of 2013, we expect to have approximately 73 million in EBITDA. On next slide, we see CTM's debt composition. At December 2012, CTM had $330 million in debt with commercial banks. You can see on the chart the debt that we had credit with mainly local banks, that's Banco de Crédito, BBVA, Banco Continental. And also we have 120 million debt with a parent company, that's REC. That is the other company that the group has in Peru. And in May, with the issuance of the international bond, CTM prepaid all its debt. That's the commercial debt with banks and with the parent company. In July 2013, as you see on the chart, CTM debt composition were $450 million from the international bond and $34 million with a local bank, that's Banco de Crédito del Perú, and that loan is under a trust structure. I mean that the debt is under it was taken by the trust to finance the Trujillo Chiclayo project. Okay, and finally, on the next slide, we can see some important ratios. We can see the evolution of the ratios. We have EBITDA adjusted over service debt. We have for the first half of 2013 1.5 times, and we expected to end this year with 2.4 times this ratio. Talking about EBITDA, adjusted EBITDA over interest expenses, for the first half we had 2.2 times, and we expected to end the year with 2.4 times. Talking about debt to EBITDA, we have for the first half, if we consider the trust structure, 8.5 times, and without that one, without the trust structure, 7.9 times. And we expect to end the year with 7.7 times, taking into account all the debt, and without the trust structure, 6.7 times. And our free cash flow over service debt, for the first half, we have 1.9 times, and we expect to end this year with 3.3 times this ratio. And well, that's it for us here.
Are they going to? Thank you. We will now begin the question and answer session. If you have a question, please press star then 1 on your touch-tone phone. If you wish to be removed from the queue, please press the pound sign or the hash key. If you are using a speakerphone, you may need to pick up the handset first before pressing the numbers. Once again, if you have a question, please press star then 1 on your touch-tone phone. Standing by for questions, and once again, that's star then 1 on your touch-tone phone if you have a question. And our first question comes from Isidro Arrieta. Please go ahead.
Hi, yes, thank you very much for the opportunity and congratulations on your results. I had 2 questions, if I may. One is, what are the rating agencies' opinion on your credit ratios? I know that Fitch would probably be confident with a lower ratio, probably around lower than 7 times, and if this is in line with, if these new ratios are in line with what they are expecting or not. And also, how are you going forward planning to finance the new projects, if it's still 70% non-recourse debt and 30% equity, and if you are willing to bid for more projects in December? Thank you.
No, thank you. On your first question, our commitment with the rating agencies was to start to decrease our levels of debt. What we have told with the rating agencies is that while we are in the construction period, we will have to maintain between 7.5 times debt to EBITDA. Once we finish the construction period, we will decrease that level. But for answer your question today, they are confident with our ratio right now. And on your second question, right now we are analyzing how will be the indebtedness structure for the new concession that we want, but it probably will be on the same trust structure that we have used for finance the last project. That means that the indebtedness will be under the trust. It will be taken by the trust, not by CTM. And we are thinking in have at most a structure of 30% of equity and 70% of debt. But that doesn't have that we haven't decided that yet. We are analyzing that. In this moment, the company is finalizing to do the schedule for the investment period, the dates that we have to make the investment, and after we have the schedule with the period that we will have to get the environmental permits and all that, we will have more details on what will the structure be for financing the project.
Okay, thank you very much.
Okay, thank you. And once again, if you have a question, please press star then 1 on your touch tone phone. Standing by for questions. And at this time, I am showing no further questions. Do you have any final remarks at this time?
No. Thank you very much to all for joining us today. and we are thinking having these calls 2 times per year. And if market and investors consider it necessary, after that we can do it 4 times per year. But the first time we are thinking doing it 2 times per year. And once again, thank you very much to all for joining us today.
Thank you, and thank you, ladies and gentlemen. This concludes today's conference. Thank you for participating. You may now disconnect.